I don't know, things were going a little better in July for about 4 weeks, Brenda, given the first half of the year that we saw. Are we back in are we backing and filling, or are we headed to something even more serious than that overall with the stock market?
Well, I think the rally that we saw since mid-June has been based on fundamentals being better than expected. And for that reason, we think it has legs here. But that being said, we've come a long way. The economy is still really healthy. If we look at things like, consumer spending, ISM surveys, industrial production, those are all still flashing a green light for the Fed to continue to raise interest rates. And inflation started to come down, which is great, but we have a long way to go. So I think we're likely to enter this period of choppiness here, where we've all been on vacation over the summer, volume's been pretty light, and we need more data, I think, to give us more of an indication of just how far the Fed needs to go. Yeah. Because I think within that inflation basket, there are some really sticky areas like rent, where throughout most of the country, there are pockets where now it's more affordable to rent than buy because home prices haven't come down enough. So we're likely to see upward pressure in some of those areas, even though we are getting daily, I think, news that some parts of the inflation basket are moving the right direction. Yeah,
we just don't know how much of it is really deeply ingrained still. And it all comes back to that argument about whether what we're seeing is because of the reopening and supply chain issues and maybe some labor shortages around the country, or whether it's because we just, we were like drunken sailors, the Fed and fiscal authorities. And if that's really the problem, how do we get back to 2%? Is that really possible for the Fed to orchestrate a move in inflation back to 2%? And how high would we have to go to do that?
Yeah, I mean, I think that's a great question. And I think the answer is we need to slow the economy more. Things are still too hot. Even if we look at the job market, it's still incredibly healthy, still more than 10 million jobs open. And that's a problem. Certainly good for the consumer and an argument for consumer spending to remain relatively healthy here. But at the same time, it's not helping the inflation problem that we're having. So I think that, the jury's out as to whether the Fed's going to be able to thread the needle and, slow the economy just enough not to push us into a recession. But as the Fed has said, it's certainly possible we might. But in our view, if we do, it's likely to be mild, partly because everyone's been anticipating a recession for the majority of this year, and companies have been acting accordingly in many cases. Yep. So I don't think there are a lot of excesses built up out there.
Shepard Smith here. Thanks for watching CNBC on YouTube.